In 1920, Chicago, organized crime didn't start with bootleg whiskey. It started with a ledger and a desperate factory worker who couldn't pay rent. The conventional story goes like this. Al Capone and his network made their fortune running illegal alcohol during Prohibition. Speakeasies, smuggling routes, Tommy guns, the narrative writes itself. And it's true as far as it goes. But here's what most histories skip over. The real money, the reliable money, came from something far more boring and far more sinister. It came from lending. Walk with me through this exhibit. This telegram here, dated March 1924, is from a North Side operation. It's not about whiskey distribution. It's a collection notice. Someone owed money. The amount, $47. In today's terms, that's roughly $800. For a laborer earning maybe $30 a week, that debt was a trap door that didn't open. Chicago in the 1920s was a city of immigrants. Polish, Italian, Irish, Jewish families crowded into tenements and worked in steel mills, meatpacking plants, and factories. Wages were low. Work was unstable. A broken arm meant no income. A sick child meant choosing between medicine and food. The formal banking system didn't touch these people. So when someone needed cash fast, there was only one place to go. The loan shark wasn't a criminal mastermind. He was often a local figure, a shopkeeper, a bartender, a numbers runner, someone with cash and connections. He'd lend you $15 on Friday so you could eat. By Monday, you owed $20. The interest wasn't stated as a percentage. It was a flat fee. 50 cents per dollar borrowed per week. That's roughly 600% annualized. But borrowers didn't think in annual terms. They thought in survival terms. Here's where the story flips. By the early 1920s, organized crime syndicates realized something crucial. Bootlegging was violent, unpredictable, and attracted federal attention. But lending was scalable. It was invisible. A borrower who paid up on time wasn't going to call the police. The system was self-enforcing. So Capone's outfit, the Torrio Capone organization, and rival gangs systematized it. They didn't invent the loan shark, but they industrialized him. They built networks. They recruited local operators and took a cut. They standardized rates. They created collection enforcement. And here's the detail that matters. They kept records, meticulous records. Ledgers that tracked thousands of borrowers across the city, neighborhood by neighborhood. Enforcement was simple but brutal. If you didn't pay, someone visited your home or your workplace. Not always to hurt you first time anyway. Sometimes just to humiliate you in front of your family or your boss. To make you a public example. Because the real power wasn't in violence. It was in shame. In the knowledge that everyone in your neighborhood knew you'd borrowed and couldn't repay. By 1925, this system generated more revenue than alcohol. A single North Side operation, this is from court documents, processed roughly $40,000 per month in loans. With profit margins around 40%, that's $16,000 monthly. In a year, nearly $200,000. One operation. There were dozens. Now here's what the conventional narrative misses entirely. This wasn't parasitism in a vacuum. The loan shark system existed because the legitimate system had already failed. Banks wouldn't lend to factory workers. Employers didn't pay enough to cover emergencies. There was no unemployment insurance, no food stamps, no safety net. The loan shark filled a void that society had created. That doesn't excuse the crime. It explains it. And it explains why the system persisted. Borrowers needed the loans more than they feared the lenders. The alternative, not having money when crisis hit, was worse. So they paid. Month after month. Many of them paid forever, trapped in a cycle where the interest alone kept them perpetually behind. The real genius of organized crime wasn't the violence. It was the systematization of desperation. They took something that already existed, informal lending among neighbors, and scaled it. They professionalized it. They turned human need into an assembly line. And because it was built on relationships and shame rather than contracts and courts, it was nearly impossible to regulate or stop. When federal agents finally took down major loan shark operations in the late 1920s, they were shocked by the scale. Thousands of borrowers, hundreds of thousands of dollars in outstanding debt, and almost no one willing to testify. Not out of fear, though that was part of it, out of shame. They didn't see themselves as victims of crime. They saw themselves as people who'd made a bad bargain because they had no other choice. Here's what haunts this story. The loan shark networks collapsed eventually, but the need didn't. After Prohibition ended in 1933, organized crime largely retreated from lending, but the gaps it had filled remained open, and new operators, legal ones, moved in to fill them. Pawn shops, finance companies, check-cashing operations. The machinery of extracting wealth from the desperate didn't disappear. It just got legitimized. And that's the real lesson of 1920s Chicago loan sharking. It wasn't an anomaly. It was a symptom. When legitimate institutions refuse to lend to working people, illegitimate ones will. When wages don't cover basic needs, people borrow. When there's no legal framework for small loans, the informal and criminal markets expand. The loan shark didn't create desperation. He monetized it. This exhibit closes with a final document. It's a ledger entry from 1928. A man named Giuseppe borrowed $5. He made 12 payments over 18 months. He paid back $18 total. The original $5 loan cost him $13 in interest, and the ledger shows he never fully cleared it. He just stopped paying, probably because he couldn't anymore. His debt was written off as a loss. We remember Al Capone for violence and spectacle, but the thousands of Giuseppes who borrowed $5 and spent 18 months trying to repay it, they are the real story of Chicago's criminal lending empire. They are the reason the system worked. They're why it mattered. And they're why understanding how desperation becomes a market is crucial to understanding not just 1920s crime, but modern finance itself. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe to keep exploring the hidden systems that shape how we borrow, spend, and survive. There's a new financial history every week. This video is for educational and informational purposes only and is not financial advice. Always do your own research.